If you've ever traded Bitcoin and felt like the trend looked bullish but the move still failed, it usually comes down to one thing. Price moved but conviction didn't. Most trend indicators only focus on price. They don't care whether the move was backed by real buying or selling pressure. That's why traders get chopped up during ranges, into breakouts too late, and get trapped by false reversals that look perfect for 2 candles and then completely fall apart. Today we're fixing that with the Smart Money Flow Cloud. This indicator is designed to read a trend through a volume-weighted money flow, not just moving average crossovers. It builds adaptive volatility bands that expand when flow is strong and tighten when flow is weak. Then it marks clean regime shifts with simple buy and sell labels. We'll be using it on Bitcoin against US dollars on the 1-hour time frame. And I'll show you exactly how to set it up, what every visual element means, and how to trade it in a way that stays simple and repeatable. To get started, we're doing this on TradingView, the platform I'm using. If you don't already have an account yet and you want the same layout, there's a link down in the description where you can sign up. Open TradingView, load BTC USD, switch to the 1-hour time frame, click Indicators, and search for Smart Money Flow Cloud Bus Waves, and add it to your chart. Once it loads, you'll immediately notice the chart becomes much easier to read. You'll see a colored cloud that flips between bullish and bearish regimes to adaptive bands that act as flow-based trend boundaries, buy and sell labels that appear at regime shifts, diamond markers during pullbacks, and the strength meter that shows how strong the current regime is. Now let's break down what each component actually means in plain English. First, the indicator creates a flow-informed baseline which acts like a center line of the system. But this isn't just a regular moving average. It's built using a smoothing engine and then anchored to money flow logic. That means it reacts differently from price and volume behavior, show real pressure around the baseline. The script also builds adaptive bands using volatility, so the bands widen when the market is moving with strong conviction, and they tighten when the market becomes quiet or uncertain. Now here's the important part. This indicator doesn't treat all price movements equally. It uses a money flow model that tracks where price closes within each candle's range and then weighs that by volume. So if candles consistently close near their highs while volume is strong, the system interprets that as genuine buying pressure. If candles consistently close near their lows on strong volume, it reads that as real selling pressure. Then it uses that flow strength to adjust both sensitivity and bandwidth. That's why this tool feels smarter than a standard trend channel. It's not just reacting to volatility, it's reacting to volatility plus flow. Next are the regime colors. When the system is bullish, the cloud shifts into a bullish color theme. When it's bearish, the cloud switches into a bearish theme. This is your first and most important read because it tells you which side of the market currently has control. Then you have the buy and sell labels. These appear when price crosses the adaptive bands and the regime flips. A buy label marks a bullish transition, while a sell label marks a bearish transition. These aren't random signals. They're designed to show the exact moment the system believes the market has shifted from one regime to another based on flow-confirmed movements. Now look at the diamond markers. These diamonds appear when price pulls back and touches the baseline while still remaining inside an established regime. In other words, you're already in a trend, price cools off temporarily, retests the baseline, And the indicator highlights that interactions as a potential retest opportunity. This is huge because it gives you a clean and structured way to enter trends without chasing tops or bottoms. You'll also notice that the cloud thickness changes over time. When the cloud becomes wider and more obvious, that usually means intrabar momentum is stronger. When the cloud becomes thin and compressed, the move is weaker or price is consolidating. At the bottom, you'll see a trend strength gauge that moves between bearish and bullish while displaying a percentage strength reading. Think of this as a confidence meter. When strength is low, the market is usually choppy and transitions become more likely. When the strength is high, the trend is more stable and pullbacks tend to respect the baseline much better. Now let's jump into the settings because we're making one more important adjustment. Open the indicator settings, go to the inputs tab, and find the length setting. For this video, we're changing length to 150. Here's what that changes. Length controls how smooth and slow the baseline becomes. A shorter length reacts faster, but it can flip more often and pick up more noise. A longer length reacts slower, but it filters out a lot of chop and keeps you aligned with the larger intraday trend. On BTC USD 1 hour, setting length to 150 makes the regime shift more selective and creates cleaner trend segments, especially during weeks where Bitcoin likes to fake both directions before finally committing to one. After changing length to 150, click OK. Everything else in the setting is optional customization. But here's what matters conceptually so you understand what you're changing if you ever tune it later. The trend engine controls how the baseline is smoothed. Flow settings affect how stable the money flow reading becomes. ATR settings determine how tight or wide the adaptive boundaries are. If you ever feel the signals are too jumpy, smooth the flow more. If you feel signals are too delayed, reduce sensitivity or shorten length. For today though, we're keeping it simple. Just set length to 150 and trade the system the way it was designed. Now let's talk about how to trade this indicator on BTC USD 1 hour. We're going to use two entry types, the regime switch entry and the baseline retest entry. The goal is simple. Trade in the direction of the current regime, avoid fighting the cloud, and whenever possible, use baseline touches as low-risk entries. Let's start with the bullish setup. A bullish trend begins when the indicator enters a bullish regime. You'll see the cloud switching into bullish colors, and most of the time you'll also get a buy label near the start of that move. Condition number one is that price respects the bullish structure. That means price isn't living below the baseline and constantly stabbing into bearish territory. You have two ways to enter. The first is the aggressive entry. When the buy label appears and the candle closes with strength above the boundary, you can enter on the next candle. Your stop loss goes below the nearest swing low or below the baseline area that should now act as support. Your target is 1.5 times your risk. Keeping the strategy fixed at 1.5 times risk helps maintain consistency and prevents you from overstaying trades during choppy conditions. The second entry is the cleaner setup, and honestly, this is the one I prefer. Wait for a pullback. Once the market is already in a bullish regime, let price retrace back down toward the baseline. When that happens, you'll often see a diamond marker appear. That's your signal that price has retested the baseline while remaining inside the bullish structure. But you still want confirmation. Don't blindly buy the first touch. Wait for a bullish continuation candle, something like a strong green rejection candle off the baseline or bullish engulfing candle that reclaims short-term structure. Enter at the close of that confirmation candle. Place your stop loss slightly below the pullback low or under the baseline retest area. Once again, target 1.5 times your risk, or scale partial profits and leave a runner open if BTC is trending aggressively. Now, the short setup is simply the reverse. A bearish trade begins when the indicator flips into a bearish regime, the cloud turns bearish, and you'll often get a sell label at the start of that transition. Condition number one is that price consistently stays below the baseline and fails to reclaim it. Again, you have two entries. The aggressive entry is the sell label entry. If the sell label appears and the candle closes strongly below the boundary, you can enter on the next candle. Your stop goes above the near swing high or above the baseline area that should now act as resistance. Your target remains 1.5 times your risk. The cleaner entry is the retest entry. Once the system is in a bearish regime, wait for price to pull back into the baseline from below. When price touches that baseline, you'll often see a diamond market appear. That's your retest signal with a bearish structure. Now wait for bearish confirmation. A bearish engulfing candle works perfectly here. Enter at the close of that candle, place your stop loss above the pullback high, and target 1.5 times your risk. This is how you avoid chasing moves. You let the system define the regime first, then use pullbacks into the baseline for controlled entries. Now let's talk about the biggest mistakes traders make with this tool and how to avoid them without overcomplicating things. If the strength gauge is low and the cloud keeps flipping colors back and forth, don't force trades. That's usually a ranging market. During ranges, the baseline gets crossed too often and retest signals become noisy. In those conditions, it's much better to wait for a clean regime shift followed by the first proper pullback. Also, don't treat the buy and sell labels like magical arrows. They simply mark regime transitions. The real edge comes from staying aligned with the dominant regime and entering on pullbacks when price respects the baseline. And remember, we're trading BTC USD on the 1 hour time frame. BTC can move fast and wick aggressively. Give your stop enough room to survive normal volatility, but always keep your risk fixed so one trade doesn't destroy your week. So, the completed strategy is actually very simple. When the cloud is bullish, only look for long positions. The best entry is a baseline retest with a diamond market followed by a bullish confirmation candle. Stop below the pullback and target 1.5 times your risk. When the cloud is bearish, only look for short positions. The best entry is a baseline retest with a diamond market followed by a bearish confirmation candle. Stop above the pullback high and target 1.5 times your risk. And if the system keeps flipping back and forth while strength remains weak, you wait. A quick word on expectations before we finish. This indicator is designed to retrend through money flow, which can produce cleaner regimes than simple moving averages. But no indicator is perfect. It works best when BTC is genuinely trending and volume participation is meaningful. Always combine it with basic market context. respect major higher time frame levels, and follow proper risk management rules. This is not a financial advice though. Everything is for educational purposes only. Always manage your risk, test your settings, and make sure any strategy fits your own tolerance before risking real money. If you found value in this breakdown, leave a like. And if you want more scripts like this, simple, clean, and built for real execution, consider subscribing and checking out the recommended videos on your screens. Thanks for watching, and I'll see you in the next video.